Okay. Um, I'll show you my screen here in just a minute, but first, just while we got a few people, got some fine folks coming in. Um, Things always feel different every time we're at extremes. Yeah, I mean, even at when we're in these big ramping parabolic moves as well. If you like, let's go with that for a second. If you're in some big move, it's a parabolic move. We can tend to forget about the fact that basically every other time in history that's happened, it's always ended badly. There's been like this big, massive move up, and you're going like, oh my God, this is it. I get to make up for 30 years of doing stupid stuff with my money. I'm going to be rich. And then the thing crashes. It seems to happen every time. But for a lot of people, what also happens is when you see that, because it's now, I feel it right now. Um, you just think it's going to go up and up and up forever. It's just kind of that's human nature. Um, I don't know why I'm thinking about this, but I am. Uh, so I've heard that giving birth is really, really painful for women. They really, really, really is painful. Um, Yet some of these women pop out baby after baby after baby. Why is that? Because that serious, and look, this isn't the voice of experience. It's just, and I haven't gone on Chat GPT. It's just what I've heard. The thing is, it's so painful. And yeah, you get a beautiful child and all that. I get that. I was one of those at one point. Um, but the thing is, you forget about the pain. Like the pain kind of goes away. It goes away. And then, hey, it's time for another baby. And it didn't seem that bad last time. But then here it is again. It's time to go again. And it's just as bad. The point is, the pain or the ecstasy, whatever, that we're feeling right now is the most intense that it's ever been because it's now. Okay. Similarly, now we'll get back to what's happening here. Let me get rid of this. It's not relevant anymore. Um, Similarly, what's happening here over the last several days, and I've seen it, I see it in our trading room. People kind of get a little chippy, stuff like that, or I'll get some complaints about, hey, did you see so and so posted this or that, which is fine. That's part of the job. But you can kind of tell the way people are feeling just by the things that they're saying and the things that they're writing. And so it's been pretty tough the last week or so. I mean, it's one thing, this little pullback is one thing, but hey, that kind of seems like a long time ago, doesn't it? Based on this. And so this thing that you're feeling, this big nasty move, this 10% move in what, not even a month, maybe? Uh, yeah, like 16 trading days, something like that. Suddenly, don't you kind of live to get this kind of selling again? Because at least it kind of felt a little different than you stepping off the side of a building and falling straight down. And so this time, because it's right now, feels different than these various other times when the market was really bad. I mean, COVID that was just a nightmare of epic proportions. But the point that I'm making, the point that I'm making, guys, is I'll go ahead and share my screen with you now. Um, Okay, yeah. So the point that I'm making is this kind of big sell-off can really, really rattle you, and you start thinking like we're going to go down and down and down. It's going to be brutal. But every single time, at least that I've been around, you're going to get even in a market that goes a lot lower than this is right now, you're going to get these snapback rallies. And I remember an old friend of mine, James Altucher. Some of you guys might, he's a weird looking guy. He's on, I think it's Stansberry Research that's got him. And He's he's the crypto king who will make you your next $1 billion now, whatever it is. But he's a really smart guy. He's written some books, and he told me, hell, I don't know, 20 years ago, that he ran a study. He ran a fund of funds, which is a hedge fund that's comprised of other hedge funds. And during the big bubble crash, the internet bubble crash, he said the short sellings, the short only hedge funds got killed. They were totally outperformed by either balanced or long only funds. And the reason was because of the volatility, because you're shorting stocks and you're shorting stocks, you're shorting the market and it's going down and down and down. And then the snapback can be so vicious. There's a term called getting your face ripped off. You could look it up. That's what these really nasty sell-offs do, is right when the bears start really leaning on it, something happens, and something always happens. Something happens and it brings in the buyers or the short covering, and suddenly, OMG, you're getting killed. So the point is, this is volatility. You can look here. What the heck is that? I don't know what that is. There we go. I don't know what that was. But you look at volatility, okay, here on a 1 minute chart. Here on a daily chart, at one point today, this was up at 60. Okay, so that's pretty high. I'll go ahead and snap a line here at 60. That's intraday. Okay. Hang on, I'm trying here. Trying to get this. There. That's what I want. Okay. So this is where the upper range is, 60. Today, this went clear up to here. Okay. You can't see it. I think we got to go to like a minute chart or something like that. Anyway, I'm not gonna play around with that. But the bottom line is the intraday high on this was 60. Now, if we go back and look at prior peaks, we've seen this big one here back in, when was it? This was the COVID scare. So this is a pretty high VIX level. It's again intraday. So when you see the VIX at such a massive excursion like this, you have to pay attention to that, but not in the way that you might think, where, oh my gosh, it's so high, it's horrible, it's horrible. They say when the VIX is high, it's time to buy. When the VIX is low, look out below. Or as I say, when the VIX is low, oh crap, right? But one thing I want you to be mindful of intraday is during these periods of volatility, like really, really nasty volatility, this is just today. Okay, when the VIX is moving up, that means there's more and more fear, more put buying. There's more and more fear. When there is a lot of fear, stocks do not go up. Now, I'm talking about intraday stuff, right? Okay, so when there's a lot of fear in the market, stocks kind of don't go up. They're heavy. Why? Because there's a lot of fear in the market. Nobody wants to buy. Everybody wants to sell. So the VIX runs up. That is not the time to be buying a stock because the VIX is going higher. Again, we're talking intraday here. The VIX is moving higher. Nobody wants to buy. When the VIX rolls over and starts going lower, that's when your longs will work. That's when the longs in like anything, I haven't looked at this in this context, but let's see what we can do here. Yeah. Amazon ramps up like this when the VIX is going down. So if you're day trading, this is kind of a fine point, but doesn't it seem today like everybody's a day trader? If when the market's really volatile, you see the VIX going up, that's not when you want to buy. You want to wait for the turn. And then that stock that you've been looking to buy, when that starts going higher and you see the VIX dropping, that is the time that's the time that you really want to be involved here. Okay. So, and in particular, what I just mentioned, that is, at least the way I see it, really, really appropriate when you're on a day three, where first thing in the morning, and I mentioned this to you guys on Friday, that holding over the weekend was kind of dicey because, yeah, we could get a gap up at the open. Maybe some good news comes out. We could, and that would be nice if you're holding over the weekend. We could get kind of a neutral open, and that would be okay too. Though I don't know what would happen then. If the market just opened flat, I guess we'd probably go higher. Don't know though. Or we could get a big gap down at the open, which freaks you out because you held something overnight or over the weekend that you're getting killed on first thing in the morning, and you would be tempted to sell before the bloodletting gets even worse. And so, if it were in a situation like this, where it's like the third day is the charm and it opens up ugly, that's when you go, think about it for a minute. So we've had two massive days of selling, and the VIX is going, seems like it's going straight up. And so you're looking at this, okay, day three, day one, smart money sells. Day two, semi smart money sells. Day three, the dumb money sells. So that's the last of the Mohicans, the people with the least amount of money. They're the ones that are selling. But are they really the only ones selling? That's when you look at the VIX. On the third day, the market gaps down. Don't just buy reflexively. On some of this stuff, it would have worked just fine, but we're in a real volatile market. But instead of doing that, you look at the VIX intraday, you can compare it with the stock that you're trading. And then as soon as you see the VIX start to turn the other way, that's when you go long your stock. Is this making sense to you guys that are on here? Glad to see so many here. So this is welcome, by the way. Glad to see you've come out of your bunkers and you're here. So this some of the things I wanted to show you is that one of them was the one that I just did, but we get this kind of move. I expect I could be wrong. The market could say, well, Dan, I've listened to what you said last night, but it's Tuesday morning and I think you're wrong. I think the market can run up here a little bit. This red line here is the third standard deviation, like 99.9% of the time. This is supposed to be below the price. In other words, you're never supposed to see prices outside this third standard deviation. Yet 2 days in a row, you could even say three if you want to. We've seen this. So with this kind of extreme excursion, you're almost guaranteed to see some kind of a snapback rally. Now, it could be to here. I seriously doubt it. It could be to here. That's a possibility. It could be up here. What I don't see happening, unless there's some weird random news thing, what I don't see happening is this moving lower through this low. Frankly, think about this for a minute, and I'm just kind of going through different theses here. I'll look at a couple stocks, but this isn't like, hey, buy this stock right now. I'm just talking, kind of waxing philosophically, as you would say. Somebody would say that. I wouldn't, but I just did. So tomorrow, the S&P could come here. Maybe it comes here. The way I look at that is that'd be a good thing. That'd be a really nice setup for Wednesday, because then what we got is, instead of this lower low and lower low and lower low, I'm talking about like the intraday lows here. If we get a higher intraday low, that sets up a really nice move. Uh, really, really nice move. For Wednesday. Sorry, got a plumber in the other room here, leaky faucet. So that's what I'm looking for tomorrow. Is what I really, really care about the most is what's the intraday low of this? Because if we get a higher low, you're going to see some short covering. You're going to see some buying. I already saw a note by Goldman Sachs's head trader. Um, Hang on. where he was saying, and this is for his trading desk, saying that, look, I was bearish a minute ago, but right now I'm really bullish. It's time to start scaling in. And so I think we're kind of seeing that. We're kind of seeing this happen right before our eyes. And there aren't any real bulls out there. And when there are no bulls out there, that's typically the time where you'll see the bottom. Because if you're a trader, if you're not bullish, that means you're bearish, which means that you're not buying stocks and you're selling them if you got them. It's a lot of downward pressure, but at some point, all your money is out there, and now the market's got to go the other way. So I see this as I think tomorrow's going to be a really, really interesting time. I think it's going to be a real interesting time. And this is one of those times when I want you to be thinking about looking back on this 6 months from now and being happy, being proud of what you did. That you, yeah, I handled that right. I didn't panic. And by the way, this is an aside, and I'm not going to talk about this in any detail now, but if you have rules, you'll never be in a situation, you'll never be in a pickle where you're going like, what do I do? Oh my God, I'm losing so much money. What do I do? If you have rules, because your rules will gradually scale you out, they'll gradually raise cash. They'll gradually make you go like, crap, I can't find anything to buy. Well, I have a rule. If I can't find anything to buy, I sit in cash. So your rules will ultimately keep you out of a predicament that you might be in now, where you're wondering, what am I going to do? So that's for next time. But what I'm saying now is, if you're thinking about selling, you're too late and you're too early. I'll put it that way. And so I'm looking for more upside on this tomorrow. If we look at the cues, we get the same thing. And I'll say it once again. I'm looking more at where the low is going to be tomorrow. It'd be really nice, because guess what? I have long-term investments too. It'd be really nice to see a big face rip and rally tomorrow, but I don't think so. But what I would like to see is, let's see, what's the low here again? 402.39. So I would like to see this level hold up. If we get an intraday low higher than that, look for Wednesday to be a good day. Now, a couple stocks in our session today that people were asking about, or one of our members was asking about this. Hey, what do you think of BJ's? And I hadn't looked at this in a long time, but I looked at the chart, and I'll be honest, I'm going like, the hell is the stock doing in an uptrend here? Is this an ETF, an inverse ETF, or what? Like, there's like hardly any of those. But so I looked at this. I said, well, it's definitely in an uptrend. It's a good one to be owning. I wouldn't really buy it quite yet, because if we're just kind of looking at the general channel of the market of this stock, you want to be buying it closer to the rising support than the rising resistance line. And then there was another stock that we were looking at. This one, totally different chart, but you can see how this, while everything else was selling off, Celsius was just hanging tough. And so this is the kind of thing that you like to see when the market is really just taking no prisoners. You see one stock that, I mean, forget about all this stuff. You see one stock that's outperforming by a mile. That's a stock that you want to keep an eye on too. So BJ's and Celsius are two that I would want to look at. Eris, I need to take the flag off of that. Ibex, same thing here. So here's BJ. Here's two that I'm looking at. Now, I want to show you something else. So this is the kind of thing that I'll look at during days like this. So I've got this list for my growth stocks. It's not complete. Don't worry about, hey, send us that. It's not totally up to date, kind of, but not really. Well, I'll put it this way. All the charts look like that. That's actually a good one. Or they look like this. So all these charts have really been broken by this big bad bear, right? But so what I'll do is in the morning, I will sort these according to either the biggest winners at the top or the biggest losers, but you can see I've got them ranked in order, right? So here, the biggest winners are right at the top. And I like to go, I'll just look at this and it'll give me a general sense of what the market's like. Like Celsius here is the last one with a positive close, and that's 27 out of 50. So basically 50% of stocks closed up on the day. The other 50% closed down. Not exactly, but close enough. So this tells me one thing. Now, a couple days ago was Saturday. We'll say on Friday and Thursday, there was virtually no green here. It was all red. And so, but when I look at something like this, I just bang through, and this is the kind of stuff that you're going to see. You'll see these similarities of busted stocks with a down gap and then a higher close. And this tells me, I mean, it's one thing to be looking at the QQQ, or the S&P or whatever your flavor is, and see this kind of gap down and reverse. But it's another then when you start looking at some of these stocks, and they're not all in the S&P by a long shot. You start looking, most of them I think aren't. You start looking at these and you're seeing the same thing. And what this is telling me is, okay, there's some broadening in the buying. There's a lot. This ain't just Apple and Amazon and Google and Microsoft and Meta and Nvidia going up. Sure as heck ain't Tesla. This is a lot of different stocks going up. So this gives me a really, really high confidence that what I was actually saying earlier, which is I think we're going higher tomorrow, gives me a pretty high confidence that this is going to come to pass, because we're seeing money come into the market in so many different places. This is such a big, in my mind, this is just such a big tell. Along with this massive volume. I'll just go back here. Like, look at the red line is the 20-day moving average. All these skyscrapers way above this. And so what this is telling us is there's a lot of money changing hands. And today, all that money was being exchanged for stock. So I want you to be mindful of that tomorrow, and just be aware that, again, the time for selling, you're too late if you still got a boatload of stock. But you're also too late if you're looking to sell right now, because the stock could go a lot lower. And so you don't want to be, in my mind, though, if you bought anything today, you don't want to be taking your profits either and say, no, I made a little bit of money. That's new for a change, so I'll go ahead and sell. Don't do that. Just hang on. Let this volatility play out. And I think you're going to find that you will be very, very happy in the way things are working out. Now, one thing I want to look at before we go, stocks above their 200-day moving average. Okay. At one point today, yeah, just about the low, 14.26. Less than 15% of stocks were above their 200-day moving average. And by the way, that was Friday. So now if we look at today, at one point there were less than 10% above their 40-day moving average, or their 200-day moving average. So if we want to snap a line across here, I'll just put it right around 10%, which is what the max low was. Where have we seen this? We haven't seen this since the Fauci crash. And so this tells us, and again, this is the 200-day moving average, a very, very slow indicator. This tells us that the market is just at maximum stretch here. That rubber band is stretched as tight as it could be. So, and then if we look at the same thing here, only with the 40-day, our low here, 2.97. So at one point, less than 3% of stocks were above their 40-day moving average. So When's the last time we've seen that? Same thing. Let's go out to a weekly chart. Okay, we saw it a couple times, 2008. I remember that. It wasn't very much fun at all. That's kind of it. So the point that I'm making, though, ladies and germs, is this is a major bottom we're looking at. That's my view. Now the market can prove me wrong tomorrow, but I won't feel bad because I'm just saying I see this, but the market could prove me wrong. What I won't do though is crow about it if I'm right, because it's not me. It's just reading the tea leaves here, just looking at the price action, and I have a few positions here and there. I bought some calls on the SPY today. And if we go up tomorrow again, I'll be buying some more. But generally speaking, I don't have that much going on. I wasn't day trading today. I had other stuff going on. But if you look at the way this is working, we could be setting up for a really, really nice move tomorrow and into the rest of this week. Just look at the volume. I believe that yesterday or Friday was like historical volume. And so today we're even above this, 258 million shares traded. And I don't know what it was on the typical SPX, but this is massive volume here, guys. It's huge, huge volume. And that means something. And think about it this way. Okay, we all know about the tariffs. By the way, just a random thought, like nobody's talking about Ukraine and Russia anymore. They will be again. I'm not saying that's a good or a bad thing, but what I'm saying is when the market has turmoil like this, everybody just focuses on this kind of stuff. That's just seems to be the way it is. But at some point, as they say, this too shall pass. And so I want you to just kind of be mindful of that, and don't give up on the market. I'm telling you, these are actually the times when opportunities arise, like the biggest opportunities. But this is like a chicken or the egg thing. But they're the times when the biggest opportunities arise because people think that, my God, can things get any worse? I don't think things could get any worse. And so they look at that and say, the last thing I want to do is get in the market because, oh my God, things can't get any worse. Yet the serious trader, somebody who's been around the block a crash or two, will be saying like, oh my God, could things get any worse? I don't think they can. I got to start buying stocks. Because when things can't get any worse, or when the market doesn't think things can get any worse, then things can only get better. And we factor in the future. So if you think that the tariff situation, I'm talking short term, I'm not talking about long-term policy. I don't care about that right now. But if you think the tariff situation is going to get worse and China's going to say, all right, well, we're going to tariff you like the 5 goods that you sell us. We're going to tariff you 500%. And Trump's going to say, well, then I'll see your 500% and I'll raise you 1,000. Like if you think there's something stupid like that that's going to go on, then definitely stay more out of the market because things are going to get worse. But if you don't, then maybe things, at least in the short run, are going to get better. And that means that it's really time to start looking to buy stocks. You want to be scaling in slowly. Don't just plunge in. But like I said, I've been going on too long. Actually, I think we have a question or two. But these are the times that the most money is made. These are the times that the most money is lost. Right here. This is where the most money is lost. But the most money is made in the shortest period of time on these real snappers here. So anyway, that's all I got. And Greg, by the way, Greg says, hoping your back is getting stronger. It kind of is. Those of you that might not know this, I had spinal surgery, a spinal fusion on January 22nd. And it's been a much harder recovery than I thought it would be, but it's also been the most serious surgery that I've ever had, and I've had a bunch. I have a bionic shoulder. I would show you my scar, but my wife would get mad at me. And I've had 2 knee replacements. I'm a kind of an orthopedic mess. So I thought like, it's just another surgery. But this has really been a tough one. Very, very difficult one to recover from, but slowly but surely, I'm getting there. So thanks. I appreciate that very much, Greg. So, and then Randall, one question. Ernie, I'm going out to June on my spy calls. That's I didn't want to be fretting whether we get another down day or something like that. So I mentioned earlier I bought some spies. I think they were the 490s, if I'm not mistaken. I don't really remember exactly, and I'm just going to kind of hold them for a while. But Randall says on your China example, didn't Trump do that today? Add a 50% tariff to China in response to their 34% reciprocal. Yeah, knowing Trump, he probably did. So yeah, he raised them. I'll see your 50 and I'm going to raise you 34. So we'll see how far that goes. And I don't profess to know whether any of this is good or bad. I've been very clear about that. I understand what they're doing. I understand why it is being done, but I don't know enough to have. This is why I'm not calling up Charles Payne saying like, hey man, you want to have me on your show to talk tariffs? I got nothing to say. So let's just say we're going to wait and see how this plays out, but also be mindful of this. And listen to me because I'm giving you pearls. Hang on just a sec. I want to be looking into here. Okay. Listen to me. As traders, we don't care about the tariffs. I don't care about the tariffs. I don't care about what the stupid Fed does. I don't care about any of that. None of that matters to me as much as the charts do. If you really want to know what's happening in markets, don't listen to some chucklehead on TV, whether it's me or the guy with the rolled up sleeves going bye, 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 and all that kind of stuff. Don't listen to anybody telling you what's going on in the market unless you don't have charts. But if you're able to look at charts and you're kind of halfway adept at it, you will be able to know exactly what's going on in the market, irrespective of any tariffs, okay? And anything else that's the topical news that day. So always be focusing on the charts and always be realizing that the market may be dumb sometimes. Sometimes it's an idiot. Sometimes it's a knucklehead. Any of those things, all of those things, it may be totally irrational or insane. However, the market is also strong enough to decide what's smart. So we can look at it and say, well, this is stupid. This has gone too far. The market may disagree with you, and the market gets to be right 100% of the time, meaning we don't get a vote. We don't have a say in it. This is not a negotiation. You're not negotiating with prices. You shouldn't be negotiating with your account. You shouldn't be negotiating with your rules. Your rules should be non-negotiable. And I can tell you from experience, rules are there to keep you out of trouble. 95% of the time, you don't need rules. You don't need them. Markets tend to go up. You don't need rules. The lack of rules will get you in to stupid stocks at stupid times, but a bull market will bail you out. The problem is the one time that you need rules is the time when things feel the best. And so, but like I said, 95% of the time you don't need rules, but it's that other 5% of the time that will absolutely crush you. Your rules need to be in place all the time, and they'll keep you out of this big tailspin. I'll just tell you that. And I've been in this big tailspin before, but not anymore. I have like 3 different accounts. I'm just sitting fat in cash. Put a little bit to work today, but this has just been, I've been more concerned about our members not getting clipped in this, and been really, really thinking more about you guys, because I'm good. I don't really have anything to do right now because there's been nothing to do. Now I'll probably turn that around and you'll hear about it when or if I do. And no, Mark, I will not play Layla for you. You see my guitars. One of these days I'll show you all of them. I more than fill the wall. So anyway, okay, and then Steve, we'll go with this and then I'm out of here. It could be a buying opportunity for us. Yeah, could we expect to see more buyback announcements during the earnings season? That's a really good question. I don't know the answer to that. I mean, it could, but the countervailing, if I'm using that word correctly, argument to that would be that because look, there is so much uncertainty in the economy with the tariff thing. I get it. There's a lot of uncertainty here, and so companies may be just thinking like, we don't know exactly what our business environment's going to be. We're lowering our guidance. And so maybe we better just kind of keep our cash. So there could be that kind of thing where I say they get alligator arms, they don't want to reach out and get anything. But if there's some company and we could look at this at, I'd say kind of like some of the high flyers or whatever, where somebody's looking at going like, holy crap, our stock is super, super cheap. It's down 50%. Let's put this money to work because in this economy where we don't know where the opportunities are, there's really no better place to invest all this money that we have than in our own stock. And that's the situation that you'll be seeing if companies are announcing buybacks. But I think it's something to be watching for. Could definitely be a play. And if we do start seeing buybacks, you got to start being long this market because that's a key indicator. Okay, so all right, guys, listen. Thanks for showing up here at the end of the day. I don't know about you, but I'm kind of whipped. So, and I love the thumbs up. I love the emojis because it just, at least it tells me that I'm on the right track with you because I can't see the whites of your eyes when I'm looking into a camera. So you guys are all awesome. Just stick with it. Okay. These are the I'm telling you, I could go on and on about this, but I ain't going to, but I'm going to say this. These are the times that you actually need to be more engaged, not less. You don't want to be saying, I can't do this. I lost a lot of money. I can't believe I did this. I suck. I'm a horrible trader or anything like that. Don't be doing that. Don't be doing like this negative self-talk because it will crush you. Your brain, you can be saying like, oh, why did I do that? I'm such an idiot. Your brain has now registered the fact that you're an idiot. So you got to watch what the self-talk is. It's really important. And whenever you're having an issue, if you lose, like you lost a bunch of money, okay, you blew up, whatever the case may be. And that is absolutely a tragedy. It's horrible. I don't have to pretend to know how you feel because I've been in that situation a few different times throughout my career. Happily, not for a long time, not since a long time ago, but so I know how you feel. But if that's the case, then I would suggest, I'll propose this to you. Instead of looking at it as, oh my God, I've got this huge loss, I'm such an idiot, yada, yada, yada. Instead say, wow, this is a real valuable lesson for me. And I'm going to make darn sure I don't do that again. So you let this kind of burn in to your memory. And you always remember how bad it felt when what? When you didn't apply your rules and you got killed for it. So always be focusing on your rules. Always be thinking lessons, lessons, lessons. I learned something. This was a good lesson. My God, it cost me a lot of money. But you know what? I'd rather lose it now. I'd rather lose 10%, 20%, 50%, whatever it is right now than I would 5 years from now when I'm trading a multi-million-dollar account. something like that. So there's any number of ways that you can be turning your mind, you can be reorienting it to find the good in something that feels really, really bad. You can do it. I swear to you, you can do it. You just got to you have to just stay the course and believe in yourself. Because guess what? If you don't believe in yourself, nobody else is gonna. Amen. That's right. Here, I got to pump that up a little bit. Okay, I'm out of here, guys. I'll see you tomorrow. Okay.